All right, guys. Thank you for joining today. Wanted to have a sincere appreciation for Marianne coming on from Mutual of Omaha to talk to us today. Mutual of Omaha is a very strong partner of ours, introducing for the first time here on our training session. Hopefully, will not be the last time. But also, more importantly, we have a really cool pilot program that 3Mark has been affiliated with. And so, speed to issue, everyone is talking more and more about um, infant issue, non-med, all that fun stuff. Well, there's a pilot program that Mutual is working on for not their express products, but their standard products with instant issue. And we were elected as one of the groups to pilot that. So we'll talk more about that on the back end. The first part is letting Marianne share with us the value proposition of Mutual of Omaha, what they bring to the table and why. And we will dive in. So, Marianne, I'll let you
Okay.
take it over. You have
Okay.
all access to share as well.
Sure. And Connor had mentioned it was on simplified issue. Is that correct?
You can do everything.
Okay.
So,
Oh,
yep,
okay. All right.
yep,
Okay.
soup to
Sometimes
nuts.
it's a little bit much, so I'll start with the simplified issue products then. Okay,
Okay,
perfect.
fire it away.
Okay. All right. Well, thanks so much. Well, thanks everybody for having me on the call today. Again, my name is Marianne Kirby. I'm the senior account executive here at Mutual of Omaha, and today I'm just going to talk a little bit about some updates that we've had for our Index Universal Life Express, Term Life Express, and then some new text to sign enhancement that we've just rolled out, and then just go through all of our simplified issue product portfolio, which would be our Index Universal Life Express, our Term Life Express, our Living Promise, Final Expense, our Children's Whole Life, and also our Guaranteed Advantage, which is a guaranteed issue plan. So we'll go ahead and get started then. First off, of course, Mutual of Omaha. I always like to start with, we're a very strong, stable, and secure company, and our ratings are A plus for AM Best. Moody's is A1, and S&P Global is A plus. And again, we have, again, strong, stable, secure company, been in business for well over 100 years. We have great brand recognition. We have dedicated teams. We have a full lineup of simplified issue products as well as fully underwritten products. We have very strong, simple, and fast underwriting. With that great brand recognition, many seniors especially do recall watching the latest episodes of The Wild Kingdom when they were young, and we've brought that back. So we have that actually now on Saturday mornings. I believe it's around 9 a.m., at least 9 a.m. Central, and so you can watch that on NBC. Real fun program. And we do have a full lineup again of simplified issue products, and we have everything from that you can sell from 2 weeks old all the way up to age 89. And so we have the children's whole life, again up to age 17. The Living Promise Final Expense, both a level and a graded death benefit. We have our Index Universal Life Express, our Term Life Express, a Guaranteed Advantage, which again is a guaranteed issue accidental death plan. We also have our Critical Advantage, which includes critical illness, which will issue up to age 64. And then we have a cancer, heart attack, and stroke plan that goes through age 89. Today, we'll just talk about the life products. So we won't be going through the Critical Advantage. That usually takes me a little bit longer to go through, so I like to do that separate. But we'll go through all those products today. All right, first off, I do want to make sure you guys are aware we just increased our face amount on our IUL Express and Term Life Express. No changes as far as underwriting goes. We just increased the face amount. So previously, for individuals that were applying for coverage from 18 to 50, the maximum issue amount was 300,000. We now go up to 550,000. And then clients 51 to 60, we now issue up to 450,000, and individuals 61 to 75, 350,000. So did kind of a nice jump. And again, there's no changes to the underwriting portion of this. He's still taking the application. We run a medical information bureau check, a pharmaceutical check, a med data check, and then sometimes the client has a phone interview, and we do some motor vehicle reports as needed. Why did we do this? Really just to kind of go along with today's mortgages and incomes, and just people are needing more life insurance to protect their income, or support their family. So we kind of updated that, and that's kind of the reason why that we made that changes. So it does kind of just position Mutual of Omaha a little bit better out in the field. We also have a new text to sign, which we're very excited about. So that is going to be available on all of our products. So our Term Life Express, our Index Universal Life Express, the Children's Whole Life, the Living Promise, and then our fully underwritten products, the Income Advantage, the Life Protection, our QMUL Answers, and Term Life Answers plan. So all these products have a new text to sign. And basically, I'll just kind of show you what happens. So when you're completing an application, you have the option of completing an email signature or a text signature. So if you're not present with that client, so you're doing this over the phone or through Zoom, you can go ahead and select either email or text. If you email, the client gets an email, they sign via email. But if you want to text them, you can go ahead and click that. And then from there, we're going to have a little drop down, and it's from that drop down, you're going to have the option again to either sign with a code, sign with a text, or again, sign with an email link. So if you choose signing with a text code, which is new, the client will receive a text and it'll have a code. So then they provide that code to you, and then you continue on with the application, and that code would then be their signature. So that's kind of how it's working, and it's been makes the process much easier. Just to mention, with our express applications, we do have kind of like a two-step program where you sign the HIPAA authorization first, and then the client signs the actual application. You can use the text signature in both instances. So you still do have that two-step process, but it's going to be much slicker with that new text authorization code.
Do you know how many people are using text authorization at this point?
That's a good question. I haven't heard anything yet, but I think agents are really liking it. So I think it's been adopted very, very quickly.
Yeah, I was
So
gonna
that's a
say,
good question. I'm gonna have to ask.
first time I've heard it, and I think it's amazing. One question that did pop up too is,
Mhm.
how are you guys? So I don't know if you can see the clientele in
Yep.
the chat list, but
Now we can.
a
Yep.
lot of foreign national inquiries. So how do you guys play on the foreign national side, either with the instant issue or the simplified issue, if you will,
Mhm.
or whatnot? So how do you guys play in that space?
Yeah. So you would have to have a social security number. They would either have to have a green card, or they would have to have a particular visa. So I could probably pull that up as far as the visas and send that over to you guys in the chat here in a minute. But so they have to have an approved visa. They would have to live in the United States for at least 12 months and have to make at least $20,000 of income. So that's kind of our requirement. But we do only have certain visas that we will accept for foreign nationals, and we don't accept I-10 numbers. Not at this time. We're working on it. We're really trying hard with our underwriting team to
Like everyone
get them
is.
to answer. Yes, we'd love it.
Yeah. Well, you'll see a lot of H-1Bs. So
Yeah, let me
that's
pull up my. Let me see here 1 second. Let me pull that up real quick, and I'll tell you here if we've got that. I'm pretty sure that is one. Um,
Yeah, that would be awesome because I didn't hear much on the how much is the income? It's 20,000?
20K.
Okay,
yes, let me
20K
pull that
per
for.
year.
Yep, 20,000. So here's kind of our foreign national requirement.
Yeah, and
See
also
here,
is the visa validity for 12 months, but is it like
12
it's a
continuous months.
yeah.
Yeah,
Okay,
so it's,
okay,
let's
okay.
see if I can
Got
make
it.
this a little bit bigger for you because it's kind of small. Okay, here we go. Okay, here we go. So they do either have to have their valid permanent resident card, or one of these approved visas down here. And H-1B is a visa that we do accept.
Or are you sharing? Because we don't see anything.
Oh, are you not seeing my? Oh gosh,
No.
that would be helpful. Thank you for saying something because for some reason I thought I already shared. Hang on.
You're
I
fine.
thought
You
I
guys are
was
probably
just
like, oh,
really confused. So thank you, Phil. I'm like, what am I missing?
okay, good.
It's
Okay.
because of you, Angela. It's just because of
It was me.
you.
I just messed it up.
Okay, here we go. All right, now let me move that back over. I'm sorry. Okay. I'm glad you guys said something because I didn't share and I should have, and I'm not sure why I didn't.
Oh, there we go.
Okay. All right. So there's the H-1B. So here is the requirements up here at the top. So they have to have either a valid permanent resident card or we'll accept these visas here.
Okay.
Thank you.
And
Yeah, the
then,
big one's H-1B. So
yep. Mm-hmm.
now there is one, and I mean, Marianne, I'll just give
Mm-hmm.
you insight. In between a
Mm-hmm.
green card and a H-1B would be a EAD, Employment Authorization Document.
Mm-hmm.
So when I worked at my prior company, we had to finagle or kind of massage that with the underwriters so they understood that it's like the next level up from an H-1B. Uh,
Mm-hmm.
if you don't have the answer, would
Yeah,
love
I
to.
can check back. Yeah, I can check
Yeah.
back with
So it's
her.
just an
Okay.
EAD, Employment
Yep, got it written
Authorization
down.
Document.
Got it written down. So that's my first question. Got it. I
Great.
will check with them probably tomorrow. Okay.
Okay.
All right. Well, all right. Let's move forward here then. Gosh, I'm glad you guys said something about me not sharing my screen. All right.
It's like all this good information. I'm sitting here
Yeah.
going, like, I don't know if I'll remember this. So I like
Yeah.
pictures.
Yeah. Yeah. Me too. Me too. Okay. So, um, let me get back here actually. All right. Okay. So, as far as the Index Universal Life Express, this particular product, it does provide a no lapse period. It does offer flexibility for future and, the coverage. Again, we don't ever go after any paramed exams. We don't ever do any lab work. We don't go after any medical records. So this particular product is just accept or decline. So based off the application, the client would need to answer no to all the health questions. And then again, we would run a medical information bureau check. We'll run a pharmaceutical check. We'll do a motor vehicle report at certain ages and as needed. And then they may have a phone interview. So, who's your target market? Really, anyone who's looking for a long-term death benefit, maybe to protect their family or replace their income. As far as issue ages, we issue the IUL Express between ages 18 to 75. And we, again, just increase those face amounts. So 18 to 50, $550,000 of coverage. 51 to 60, $450,000 of coverage, and clients 61 to 75, $350,000 of coverage. Have two risk classes for this product. It's either standard non-tobacco or standard tobacco. And then we have a couple different indexing strategies. We have a 100% participation rate, a higher participation rate, a lower participation rate, and a Bank of America Agility Index. So they have those four options. And typically with this product, a lot of agents choose that 100% participation rate. And we do have it kind of built into our e-application, where if you're completing an e-application and you choose what's called our Easy Solve, then it's going to be at the 100% participation rate, and it's going to solve for a cash value at age 120. So that's kind of a lot of agents are choosing that just because it makes it easy.
Could I just, I'm sorry
Yep.
to ask another question.
Oh, no, ask away, please.
So you don't really see 100% participation rate a lot. So is that 100% par on the S&P or is that?
Yes, correct. It is on the S&P, and I can pull up here. We have kind of like our history, which I
That's a
can
big
pull over
deal.
if you want to. Yeah.
That's a big deal.
Let me kind of just pull it up here so you can see it. We've got a historical rate flyer, which I can show you. Let me grab that and throw it over here. Okay, and I'll make it bigger because I know it's really pretty small and hard to see. Let me do one more. Okay. Hopefully you guys can see that. So we do publish our crediting history. So that is out here. We change it every month, of course. So we're still probably a few more days before we do May. But we do have through April out here. And here's the 2026 crediting history. So you can see, you know, what did the S&P start with on, we sweep the 10th of every month. And so just looking at January of 2025 when it started and going through January of 2026, the S&P did change by 19.55%. We do have a cap on this product of 9.25%.
Okay.
And so then they ended up getting a crediting rate of 9.25%. And so they've actually gotten that this year, but I'm going to go back. So again, that's the 100% participation rate, which again is the most popular. But let me see. Yep, here we go. You can see a little bit different here. So this is 24 to 25, and I'll just pick on, let's see, I want to show you April. In April, you'll see here. So starting in April, you know, started at a value of, 5,160, ended at a value of 5,268. And so the S&P only changed 2.08%. So they did get 2.08%. So it didn't hit that cap, but then you'll see some of the other months where they got that 9.25%, or here, let's see, they got 8.37%.
So quick question for that too, because you have so two things. One, I'm going to ask a question, and then I know Akshay wanted to ask a question too. When you talk about 9.25%, we have some carriers who are higher, lower for the S&P. When we talk about rate integrity, right, I think that's a big thing that a lot of people miss.
Yes.
Do you guys, some carriers will tout this, their in-force buck is the same as their new business. Some don't. So what's your stance on that, if you don't mind me asking?
Yeah. So yes, you are correct. We at Mutual of Omaha, it's the same rate that you're going to get if you have existing policy as someone who is just taking out a new policy. So yes, we
That's
do have
awesome.
that rate integrity, because we're not going to give you a lower rate than what somebody who's purchasing it. So I have a coworker that he used to work at another carrier, and he purchased coverage himself and with that other carrier. And over the years, he had developed cancer, and so he's not insurable to be able to purchase new coverage, with Mutual of Omaha. And so he always likes to bring out his personal policy and show people, here I am getting this very low rate, when they're giving someone this new rate. Look at the rate that I'm getting as a policy holder. So it really is something that you really do need to look at when you're selecting a company. So
Okay.
yeah.
And
All right.
I know Akshay had a question too.
Okay.
He private messaged me. Akshay, go for it.
Thank you so much, Phil. Miss, can you go on that PPT?
I'm sorry,
Can you go on that presentation?
Back to
Oh,
the
sure. Yeah, go back to it. Yeah, you bet. I'll pull it back over. Yep.
Yeah. So here is a face amount. So from,
Mhm.
let's say, from age 18 to 50, so
Mhm.
maximum 550, you guys do like a normal underwriting, or why is that limit? If I want to
Yes.
get $1 million, is that possible?
So we do have, so this product is just express issues. So we have those limited face amounts because we're doing limited underwriting. So we're not getting any paramed exam. We're not doing any lab work. So it's just a quick issue product. And so that's why it's kind of capped at those amounts at 550. If you have somebody who has $1 million policy, you can
Mhm.
apply for our fully underwritten products. And
Right.
with that, we start at 100,000, we go all the way up to 65 million, so or higher even. So yes,
This is the
you can
Express
use.
product.
Yeah, these
So
are
it
the
is quick
express
and dirty.
products.
Is
Yep,
the
just quick.
express, but not a instant approval?
So in our e-application, we do have both a pre-qualification tool. So when you're starting the application, we have you complete the client will sign a HIPAA authorization form, and that's again with the text signature they can do it, and then from there we can run the pharmaceutical report, the med data check. And so we can tell you, if the client is looking favorable. If they're looking favorable, you continue on with the application. If they're not looking favorable, you just stop because they're not going to be approved with the IUL Express or Term Life Express or Final Expense. So this process is for all of our Express products. So you can just stop at that point, don't continue on, and then maybe pivot to our fully underwritten product, and then go that route. But if it's a accept or decline, standard non-tobacco and standard tobacco, do they use tobacco products or do they not use tobacco products? And tobacco products can be anything from cigarette smoking, cigar if you smoke a lot of cigars. If you are using vaping or any kind of nicotine replacement, would all be considered a tobacco user. People always ask about marijuana, and it is not even a question we're asking. So,
And I'll kind of preface too, just to kind of share some things too, because I know Marianne, you're told to do IUL Express or the Express products, which they do have an Express term too. So when we look at Express, there is a bit of a little bit of a cost, more of a cost versus the stock product. Okay. But if you have someone who needs it immediately, doesn't want to get blood drawn or urine, these are the ways to go. So they can only do so much from an Express standpoint, hence the face amounts, which even those increases are amazing for something that's more of a non-medical, so to speak, or potential for non-medical. But there is a little bit of an upcharge if you say for convenience. So if you have someone who is cost conscious or they're like a super preferred, we're going to talk about it for the regular product anyway. This is quick and dirty. Move on and find the next one kind of products. Okay. So and at the end we'll again talk about the pilot program and how that's going to work with the stock products. But the most important thing too is, as she was mentioning, with the index strategies, so that's across the board for all the products. That's a big deal. When you're talking about rate integrity, crediting integrity of certain other carriers, I won't mention their names for my integrity purpose, but there are companies that will drop your crediting rates. I'll pick on Global because Global's not in it anymore. On the life insurance side, Global had 13, 14% caps that went down to 6 or less. And they just said they couldn't do it anymore. So the fact that this, Mutual of Omaha is literally telling you that they're going to give you on the S&P a 9.5% cap or 9.25 or in the nines in general, but the new business and the existing business is the same, is a huge deal. So I think, what we always say and what I'll always say is illustrations are one thing. You just put that thing stick to paper. You have to sell the product and the carrier too, because years from now, it's going to be you facing the client day in and day out, and you want to make sure that you have a positive story for them. So, again, the Express is limited for reference of conversation, but they do have, as Marianne mentioned, up to 65 mil, which is amazing from a estate planning perspective and things like that. So, I'll fade back out, but I just wanted to, set the stage, which I forgot to do.
Yeah. And then just so you know, when you do submit this at the end, when you get that pre-qualification and you get that that they're tracking favorable, and you continue on with the application, and then you submit the application, you do get a auto decision. So you're going to get either accept, decline, or you're going to get referred to an underwriter. And when it's referred to an underwriter, it means our tool just can't make that decision. So it refers to the underwriter. The underwriter reviews it. About 70% that are actually referred to an underwriter are actually approved. So it's just that somebody has to look at it and make that decision. So, all right, let me continue on here. And here's our underwriting requirements for this product. We have a build chart. We do, again, we run a medical information bureau check. We run a pharmaceutical check. We, again, do that motor vehicle report for certain ages, and then as we need, and then phone interviews. And phone interviews, if you're doing an electronic application, we've actually tried to eliminate a lot of those phone interviews by the application. It kind of asks some reflective questions. So maybe we need to know why you're taking a certain prescription. We can actually ask that question in the e-application now. So, and we just continue to get better with our e-application. And, as we see things and trends, we try to kind of improve our e-application so it has that built in. And here's just the height and weight chart. So it is a unisex chart, and this is for all of our Express products. And so I'll just show you the IUL Express at 6 foot tall. You have to have a minimum weight of 122 pounds and a maximum weight at 305 pounds. So again, it's just unisex rates.
Those are healthy builds, I'll put it that way.
Yep, exactly. Yep. So they're generous. Yeah, they're a little generous. So, and then we do have express product prescription drug exclusion. Maybe they're taking certain prescriptions. These would be the knockout prescriptions at the top, and then the ones at the bottom would be the ones that we just need to get some additional information on why are they taking those prescriptions. So it's just kind of a guide so that you can kind of see what would knock someone out if they're taking a certain prescription. And usually these prescriptions are being taken for some kind of question on the application where they'd have to answer yes to. All right. So we do have some riders on the policy. So there is some no cost riders. So these are built into the policy. Whoops. Somehow I just flipped the screen. Okay. All right. Sorry about that. So we have living benefit riders. So these are, again, built in. So the client can accelerate their death benefit if they are either terminally ill or they're chronically ill or they're critically ill. They can use up to 80% of the death benefit, and then 20% is going to remain in the policy. So if they're terminally ill, they have 12 months or less to live, they can accelerate their death benefit up to 80%. If they're chronically ill, the same thing, they can accelerate their death benefit. That would be if they can't perform 2 out of the 6 activities of daily living or have severe cognitive impairment. And then critically ill if they're diagnosed maybe with a life-threatening cancer, ALS, kidney failure, maybe major organ failure, Alzheimer's, dementia, something like that, then they can accelerate the death benefit. We do also have a waiver of surrender charges for partial withdrawals. So if they become disabled or unemployed, maybe they're hospitalized, they can go ahead and draw a portion of their policy out without having any surrender charges. And then we have lapse guard, which is just in the policy, kind of preventing the policy from lapsing should they ever, overfund the policy and then take loans out of it. It just prevents the policy from lapsing and causing any kind of taxable event. And so here's just a recap of our terminal, chronic, and critical illness, which we just reviewed. We do also have built into the policy a guaranteed insurability rider. And so that rider allows the insured to increase their face amount if they get married, they have a child, they adopt a child, or every 3rd policy year, they can increase it by $25,000. So that's without evidence of insurability. We do have some costs. Yep,
sorry,
go ahead.
that would still keep the limits in place, correct?
Correct, yes. So yeah, so if they've already chosen the 550,000, they wouldn't be able to increase it at that time. But they can always, change, from a level death benefit to increasing at any time. Right. So we do offer also with the IUL Express, we have an accidental death benefit rider that can be added. We have 2 disability riders. So we have a disability continuation of plan premium and a disability waiver of policy charge. And so the difference between those 2 is, if let's say the policy charges in the policy are $20 and they're paying a premium of $100, If they chose the disability continuation of plan premium, we're going to put $100 into their policy just like they're paying the premium. And if they chose the disability waiver of policy charges, we're going to put $20 into the policy just to keep the policy afloat. So that's the difference between those two. And then we have a dependent child rider that can be added, and that can be added up to $10,000. Okay. Any questions so far on the Index Universal Life Express? Let me go back to the. All right, let's see here.
Preeti, what was your question about half term, half perm? I didn't quite get that. Do you want to just ask that?
Yeah, so there was one of a product which says if they cannot afford for directly IUL, so can they go for first term and then added IUL to it?
Yep. So we have our Term Life Express plan that if, maybe they, like you said, they can't afford the IUL Express at this time, and maybe they want to do something like a term, our Term Life Express does allow them to convert the policy. So they can convert at a later date to our IUL Express.
No, it's not a conversion. It will be,
Oh.
Yeah, it's a combo of both at the same time. I
Like
don't remember
like
the
a
exact
term
one.
inside of a IUL?
Yeah. So this particular product, I don't believe we can add it, but let me check here. I don't think I've ever illustrated it. So let me check here. I don't know if we can actually add that on there.
So let's say like a 250K term and then 250K IUL as a like one product at the same time of underwriting.
Yeah. So like our fully underwritten product allows you to go ahead if you do the IUL and want to add a term rider, we definitely have that available. Let me check on the IUL Express to see if we offer that. I don't think
But
we
the
do.
Express one, it's not there on the Express side.
No, it is not. I just double checked. We don't have a way to add that. But again, it is available on our fully underwritten product. And if you guys would want me to, I can pivot over to our fully underwritten products if you guys would prefer that. What do you think?
No, that's fine. Thank you for confirming.
Okay. Sure. Yeah. Okay. All right. Well, I can just go through our Term Life Express real quick here. Our Term Life Express, it's for young families, dual income families, people who maybe have some long-term debt, such as a mortgage, and they can use this product. Same exact issue ages and face amounts as the IUL Express. We have a 10-year, 15, 20, and 30-year term. And the 10-year term, we issue up to age 75, the 15-year term up to age 70, the 20-year term up to age 60, and then the 30-year term up to age 50. So again, there's only two risk classes, standard non-tobacco and standard tobacco. As far as qualifying, it's the same application as the IUL Express. It's the same underwriting requirements. So same questions on the application. So if they apply for the IUL Express, they'd also be eligible for the Term Life Express, and same thing with Term Life Express. Same exact build chart, MIB, pharmaceutical check, med data check, motor vehicle reports, and phone interviews. So we're going to have the same underwriting requirements. And then a lot of the same riders are going to be available. So the same living benefit rider, that terminal, chronic, and critical illness, where they can accelerate their death benefit at 80%, that's also on the Term Life Express. In California, we only have terminal illness, just FYI. We do have a residential damage waiver premium rider. And what that rider is if they have $25,000 or more damage to their primary residence, we'll go ahead and waive the premium for up to 6 months. So maybe it's a hurricane or a fire, any kind of damage to their house, to their primary residence of $25,000, we'll go ahead and waive that premium. And then we do have waiver premium for unemployment. So if they've had the policy for at least 2 years, we'll go ahead and waive their premium if they're unemployed. So they have to be receiving either state or federal benefits, and then we'll waive that for up to 6 months. And then we have something called the common carrier death benefit provision. So if they would pass away in a common carrier, so like a plane, a train, something where they're a fee, paying passenger, then we'll go ahead and provide an extra death benefit at up to 100% of the original face amount. So again, that would be if they're a fee-paying passenger. If they are a member of a flight crew, pilot, that would not be covered. And then we have some cost riders. We have a disability income rider. So that rider, that would be if they want to select that with this particular plan, we either have an 18-month or 30-month period of time where they can go ahead and get a disability benefit up to 1.5% of the face amount, $3,000, or 60% of their gross monthly income. So whichever one is higher. Whichever one is lesser. And we also offer a disability waiver premium. So again, if they become disabled and they can't work, then after 90 days, they would be able to go ahead and use this rider, and that would cover their premium for as long as they're disabled. And then we have an accidental death benefit rider, which can be added, and then that dependent child rider, again, up to $10,000. So some of those same benefits that are on that IUL Express are on this Term Life Express. We do have a few different ones like that. The residential damage waiver and that common carrier. Okay, any questions on the Term Life Express?
Prajesh had a question.
Okay.
Can a client get a max on the IUL and the Term Express at the exact same time?
Unfortunately not. We would only issue up to 550,000 of coverage if they were, 18 to 50. So they could split it, do 250 with one and 300 with another, but unfortunately 550,000 would be our maximum under either of the plans added together.
Okay. And the other one was disability income. Does that apply only for the IUL or term as well?
That particular disability is only available on our Term Life Express. So the disability income, the 18 and 30-month period, is only available on the Term Life Express. It's not available on the IUL Express. On the IUL Express, we have just the disability waivers. We don't have an actual disability income portion that will pay a benefit. Okay, any other questions? Let me check here.
I had a question.
Mm-hmm.
Can you only convert the Term Express to IUL, or is there another product outside of the IUL that you
they could convert to the IUL Express. So that would be
IUL. That's the only product. Okay.
Yeah. So if you took a Term Life Express, you could convert to the IUL Express.
Okay.
Okay. All right. We do also offer a final expense plan, just so you guys are aware of all the products that we offer. Again, simplified, underwritten. We have both a level and graded death benefit, and they're smaller face amounts. Up to 50,000 is the maximum. And who's your target market? It's really seniors who looking to cover their final expenses. As far as plans, we have a level death benefit and a graded death benefit. The level death benefit starts at age 45 and goes up to age 85, and then starts at $2,000, so minimum face amount, and 50,000 is our maximum, and just standard non-tobacco and standard tobacco. So do they use any tobacco products? And then our graded death benefit, those are going to be individuals that have a little more health issues. And so we'll issue up to age 80 for them. And then our maximum face amount's 20,000, and there is no tobacco distinction. It's just one rate standard. And for those graded death benefits in the first 2 policy years, if they should pass away from natural causes, that beneficiary will receive 110% of the premiums that the client paid into the policy. So that's again during the first 2 policy years, and then after that, anything that they would pass away from natural causes would be covered at whatever death benefit they chose. And we have one cost rider, which is in our accidental death benefit rider, so it could be equal to that original face amount. So if they chose $50,000 for their base benefit, they could get $50,000 of accidental death. And then we have an accelerated death benefit for terminal and nursing home confinement. So if they become confined to a nursing care facility for 90 days, they can go ahead and accelerate their death benefit. Or if they're terminally ill, they can accelerate their death benefit. So if they have 12 months or less to live, then they can go ahead and accelerate. So it's a tax-free death benefit. Again, if they're terminally ill, 12 months or less, they can use that accelerated death benefit. If they're confined to a nursing home for 90 days, they can also accelerate it. And then we do have that accidental death benefit rider that can be added, which is at a cost. And just so you are aware of the requirements with the final expense, we have two different parts of the application. So we have a part 1 and a part 2. And if the insured would answer anything in part 1 as yes, they're not eligible for any coverage under the final expense. So any question in part 1, they're not going to be able to get the level or the graded. But if they can answer no to all the health questions in part 1 and then move on to part 2 and answer no to all these questions, they can get the level death benefit. If they answer yes to anything in part 2, then they're going to get the graded death benefit. And technically, they could answer all these questions as yes and still get the level death benefit. So just to recap, for the level death benefit, answer part 1 and part 2 as no. Graded death benefit, if they answer no to everything in part 1, but something in part 2, they get that graded death benefit. And if they answer anything in part 1 as yes, then they're not eligible for coverage. And we run that medical information bureau check, pharmaceutical check, med data check, and do some phone interviews as we need. And again, it's built into that e-application where we have those reflective questions if we need to ask those. All of our Express products, again, have that pre-qualification too. So you'll also be able to know if your client isn't tracking, favorable, then you can stop the application at that time. Any questions on the final expense? I know I went kind of quickly through that.
A real quick question that came up. So in regards to, say, someone wants a 550K IUL Express, they have $1 million of coverage at another company. Is that going to ding you towards the opportunity with Moo, or?
We do not take that into any consideration. The only thing we might take that into consideration is if it's a financial underwriting situation.
Right.
That would be, if they're overinsured.
Okay. And the same thing with so with, my alma mater is Corebridge. If you want to get $1 million term, non-med opportunity is up to $1 million. But if you had 500K with Corebridge already in force, then they would kick it to traditional underwriting because it's the aggregate total is over $1 million. Is there an issue with someone who has a traditional Moo policy, not an Express, but a traditional Moo policy, and then they want 550 of IUL Express?
Yep.
Good or no?
They should be able to, qualify as long as they don't have above that 550,000 amount.
Okay.
Yeah, we definitely would allow that for sure. Yeah, and a lot of times people will, apply sometimes for the Express product first, and then after that go for the fully underwritten. So we see that a lot too. So especially when, with the IUL Express, it's quick, or the Term Life Express, it's quick. Sometimes maybe they're trying to get a loan or something, and they can get it very quickly. So we see that a lot. All right, and then kind of continue on with the coverage by getting the fully underwritten. All right, so I do want to kind of let you guys know about our Children's Whole Life too, just because a lot of times, along with the final expense plan, individuals also like to, provide this to their grandkids. So, parents and grandparents can purchase this coverage, and a grandparent can do it without having the parent's signature. So that's been, a lot of grandparents purchase this coverage. And this product does offer some future insurability for the child. And so there's limited health questions, 2 health questions, which I'll show you. No medical exam for the child. We don't ask any Social Security numbers, so we don't need to have a Social Security number for the child. Rates never increase, and benefits never decrease for them. And again, it offers some future insurability so they can purchase additional coverage in the future, and it does have some cash values. Issue age is 14 days all the way up to 17 years old. $50,000 is the maximum. No medical exam again, 2 health questions, and that grandparent can sign. Does build cash value and has both a guaranteed insurability rider and a waiver premium rider. We'll go ahead and talk about that. So with the guaranteed insurability rider, this offers the child to purchase additional coverage in the future. So they can do it up to 5 times. So if they get married, they purchase a home, they have a child or adopt a child, or they can do it following their 25th, 30th, 35th, and 40th birthday. So they can purchase, so let's say they started out with $50,000 of coverage, the grandparent purchased that for them, and now they're an adult. They get married, they can purchase an additional $50,000. They purchase their first home, purchase another $50,000, have their first child, another $50,000, and then maybe they want to do it on their 30th and 35th birthday. So again, up to 5 times they can do that. So they started at $50,000 of coverage, they can get an additional $250,000. So they'd have a total of $300,000. So with the Children's Whole Life, you never know as a child grows on what might happen that might make them uninsurable. So it's just a little making sure that child can get coverage in the future. We do also have a waiver premium if the owner would die. So maybe the grandparent took out that coverage. We'll go ahead and waive that premium for up to 90 days while they're figuring out the ownership of the policy. So typically, if the grandparent would own, it usually would go to like one of the parents. And then here are the 2 health questions. So we just have, again, the 2 health questions is all to qualify. So has any of the proposed insureds been diagnosed or treated by a licensed member of the medical profession for a heart or circulatory system disease, birth defect, or mental or development disorder, including autism and Down syndrome, and then any other chronic medical condition which has required care within the past 3 years. So those are kind of the knockout questions on the Children's Whole Life. Okay, before we move forward, any questions? Can you explain with an example for a child whole life? Yeah, so with the Children's Whole Life, a lot of times grandparents will purchase, maybe they've got 4 grandkids, so they might purchase $50,000 of coverage for each one of those grandkids, and as long as they're between ages 14 days to 17 years, they can get that coverage. If they can answer that, health questions as no. And then with that, so it's $50,000 of coverage. It is a whole life plan. They would have that up to age 100. And at age 100, the policy does end and the benefit is paid. We have those 2 riders, again, that are built in so they can purchase coverage in the future. $50,000 of coverage. If they, selected $10,000 of coverage, then they can do it up to, 5 more times. So if they started out with 10,000, they can get another 10,000. They get married, purchase a home, or maybe one of those anniversary dates following their 25th, 30th, 35th, and 40th birthday.
And just real quick, for those who don't know, Mutual of Omaha has a free application.
Yep.
Okay. You can illustrate Children's Whole Life, Critical Advantage, Guaranteed Advantage, Hospital Index Express, Dental, Living Promise, Long-Term Care, Med Subs, Terminal Cancers, and Express.
Yep, that's all out there.
From your phone. So, I think you guys are like the Swiss Army knife of the insurance industry with everything.
Exactly.
It's crazy.
Exactly. And we are non-participating. So with the whole life,
okay.
I see that question in there.
Yep.
Non-participating. Okay.
Okay,
right,
so for clarification on the children's one, but the max is 50 for the 5 times.
50,000.
Okay, so if you purchase the 50,000 upfront, then those 5 times to they really don't have 5 times then.
No, they have 5 times. So if you purchase 50,000,
Mhm.
they can do it up to 5 times. So if they get married, they have a child, adopt a child, or following that 25th, 30th, 35th, and 40th birthday, they can do it up to 5 times. So if they start out with 50,000, they get married, they can get another 50,000. They have their first
Okay.
child, they get another 50,000. So they can do that 5 times. So 250,000 in that situation. And then so they start out with 50, they get another 250,000. They would have a total of 300,000. If they started with $10,000, then at that point their maximum amount that they could get is 10,000. So
Okay. Thank you.
then they could get a total of 50 additional, over that period of time.
And then, like, what if the grandparents are like, "Oh, I love this product," and then the parents love the product too? Can the child have more than one of these, or is
Just
one it?
one, just
Just one.
one.
Okay.
Yep, just
Thank you.
one.
You
But we
can
do offer,
diversify with the IUL.
yes,
So
exactly. That's what I was going to indicate, that we could do the fully underwritten IUL plans.
Okay. Thank you.
Yeah. Okay. All right. And
I have
then,
one question before you
sure.
move on.
Yeah.
So under the chronic, I have a grandson that he had seizures in the past, and so
Mhm.
he had brain surgery maybe 3 years ago.
Okay.
Would that disqualify him because they disconnected the left and the right to stop him from having seizures, so he no longer has
No longer.
those
I could check,
seizures?
Tanisha. I'd have to check with an underwriter for sure. I would think it may be a decline, but I can check for you.
Yeah, that's what I'm thinking. Okay.
Yeah, so let me just write that down so I don't forget to ask. Okay, yeah, I will find out and get back to you.
Okay, thank you.
Right, perfect. Okay, all right. And then I want to make sure you guys are aware of our guaranteed advantage accidental death. So this is guaranteed issue. So no health questions. Face amounts are from 50,000 up to 500,000, and issue ages 18 to 70. We do have a common carrier death benefit, or common carrier benefit that's on here, and an auto pedestrian benefit. And so, what would happen if they would die in a common carrier? So that'd be a plane, train. They would get 2 times the death benefit. And then if they die in a auto pedestrian benefit, so they're a pedestrian in an auto accident, they could get an additional 50%. So started out 100,000, and you die in a common carrier, they would get an additional 100,000, so a total of 200,000. And then the auto pedestrian benefit, if they say chose 100,000, that beneficiary would get an additional 50,000 if they are a pedestrian and they pass away in a auto accident as a pedestrian. So they would get an initial 50,000, so it'd be 150,000 that beneficiary would get. And issue ages 18 to 70, again up to 500,000. Got those 2 benefits that are included in the policy. And then we have both family coverage, individual coverage. So spouse would be covered at 100% if you chose the family coverage, and 20% for the children. So let's say you chose a $100,000 benefit, then the spouse would have 100,000 also, and the children each would be at 20,000. And this particular product, we issue up to age 70, but it's guaranteed renewable to age 80. So at age 80, it would end. And we do have return of premium that can be added to the policy. And here's just a chart of the return of premium that they would get for each year. So at year 20, they would get 45% of the return of premium amount of all the premiums that paid in. And at year 30, it would be 100%. And here's just some sample rates of the individual coverage. So an insured male age 50, that $500,000 of coverage would cost $63.44 per month. And again, this is guaranteed issue, so no health questions. But we do have some exclusions, so I'll make sure to mention those. We, of course, never pay for death benefit if it's not in force or if it is as a result of any kind of disease or bodily infirmary. If there is any death resulting from active war, whether it's declared or undeclared, and then death while they're serving in the armed forces, deaths caused by intentionally self-inflicted injury, death from suicide, sorry about that, death caused if they are in a commission of a felony, if they're intoxicated, or if they are under controlled substance, and then if they're, in any kind of contest of speed, such as organized or not, and then if they are a member of like a flight crew. So if they are pass away, in a, as a pilot or a member of a flight crew, that's not covered either. So I always just like to mention those policy exclusions with our accidental death. But again, guaranteed issue. So if you've got somebody who isn't eligible for coverage, they would be eligible for our guaranteed advantage accidental death. And it is accidental death only. So again, nothing for any kind of natural causes. And I also want to mention our mobile quotes. I know we already had a little commercial on this one, but if you don't have it, go ahead and get that from our the Apple App Store or the Google Play Store, and just put in there Mutual of Omaha Sales Professional Access, and you can install that app and start quoting. And all of our products are out there. So, everything from the Children's Whole Life, Critical Advantage, which we didn't talk about today, Guaranteed Advantage, Accidental Death, IUL Express, The Living Promise, Term Life Express, all that is out there for you to be able to quote. And just kind of showing a quick quote here. So here's all the information that we entered, just the state, the client's age. This one's a final expense. So I entered level, male, non-tobacco user, and then the face amount of $25,000, and it just provides that premium for you guys. All right. So any questions anyone has? I kind of go quickly over this. I know you guys probably want to get through some of the other information.
I'll do the quick pilot.
Okay.
So
all right, let me stop my share here.
Yeah, so if the team doesn't mind another 5 minutes, I'll give you guys an exclusive pilot that we're working on. So bear with me uno momento as I pull this up. And so again, because you're part of the org here, in partnership come opportunities. When we have areas to improve, a lot of times carriers go to their trusted groups, but so we were elected as one of those trusted groups for the opportunity for the instant issue on their stock products. So everything that we learned, is Express, is a quick turnaround. Trying to do that with their with their current portfolio. So it's a customer-driven service, instant response. So using things like instant data, instant decisions with program parameters. So why is this important? If we can look at opportunities here to grow this type of pilot, it creates a deeper relationship with one of the biggest carriers in the industry. Okay. So it's called back scratching, right? You scratch my back, I scratch yours. In this scenario, we look at term life answers, not Express, income advantage IUL, and life protection advantage IUL. So the regular portfolio on all pays, not short pays or guaranteed pays, things like that. Face amounts, 100,000 up to 2 million. Okay, 18 to 55, so no juvie cases. Applicant must be the owner. The client has to be a standard risk class or better. So please, no trying to sneak a diabetic past the goalie. Okay. It does exclude Cali, Florida, South Carolina, Virginia, and DC. What we're looking to do is, again, leverage data, increase opportunities to get stuff through quickly. So again, when you talk about the IULs, these are not the express products. These are the stock products. So they have two, one income-based, one protection-based. In this scenario, it is just the plain vanilla product. So, well, riders that are allowed disability, uh, guaranteed insurability riders, accidental death, additional terms. So, kind of like Preeti, what you were talking about, that term rider. As long as the total combined amount is within the limits to 2 million. Okay, so no LTC rider, additional term insurance rider for the for dependent children. Illustration is not required at time of submission. Here's how it works. You would submit an application. Producer has to be fully appointed with the carrier in the state as well. Okay, so you need to have your code. Submit all business as standard or standard tobacco. And this is where it gets a little funky. Okay, so it's a pilot, so it's not going to go through iGo online. It's going to go to a designated mailbox. So you make the applicant aware that there's a chance they could receive a call from a 402 number. So what the applicant will have to have is a financial, or they'll have to be financially and medically sound with strong field underwriting, and both parts 1 and 2 of the application must be completed. I'll show you where to get those. So you can walk through the complete initial paperwork with the client, go through the whole process, notify the customer that an underwriter is going to call them probably within an hour and answer the questions. If it's like Friday at 4 Central, Monday, okay? But it has to go to this email address, mutual.transform@mutualofomaha.com. If you have a client for this, we could do it together. So that way there's simple clarity because I have this deck. But you'll receive an email response from the underwriting with an offer. If it's approved as applied or better, the policy will be issued. Review the approval with the customer, and you actually have the ability to upsell for 7 days. So if you applied for $1 million, they gave you an offer better than anticipated, the client likes it, you can go up to that 2 million or whatever the upsell is. You just have to reaffirm that with mutual.transform at Mutual of Omaha, and they will reissue the face amount. Okay, so basically the idea is that they're using data from behind the scenes. So script checks, vehicle, EHR, which is basically electronic health records. So it's a simplified version of ordering an APS if necessary, or doctor's records. And if it's not received within 3 business days, then it goes to traditional underwriting. Worst case, it goes to traditional underwriting or possibly a decline. So again, please, no trying to slip one past the goalie. Once again, you have a 7-day opportunity to upsell. You can choose not to upsell and just say issue the policy. And here's a good example of a type of client that you would see. They're looking for term life, 5/6, 145, personally married, homeowner. So career high school teacher, makes 61K. This would be a perfect example. And I'll give you guys a heads up. So you see here a prescription, a torvastatin, whatever. If you see the word statin at the end, that's for cholesterol. Typically cholesterol, blood pressure, or anxiety. Someone has one or all three, one, two, or all three. So it's not uncommon to still get a good risk class with just cholesterol med or blood pressure med, et cetera, et cetera. So what I would say is what you'll look for is on the website for, say, 3Mark, you go to launch forms and IGO. And there's two ways you can do it. One, you can do United of Omaha, new business. Let's just say whatever state you're in, and term life, and not the Express, but I can actually get the term life answers fully underwritten because I need the part two and get PDF forms. And you can actually open up these forms and, oops, yeah, you can open up the forms if I download them. And what would happen is that you could fill out all the information in the PDF, or if you wanted to, you go to iGo eApp, log in, start new case, and let's just say we go to term life. Okay, so I want to do the full application. I can select here, fill everything out, and before I get to the end where it says lock and sign, print it. And then we get a DocuSign for the client, or if they're with you, print it or whatever. DocuSign is easier, but then we just send it to this email address that they have, the mutual.transform@mutualofomaha.com, and we can have the opportunity for instant issue. So backwards. Again, I understand the situation of instant issue, but yet you have to basically print out an application, but they don't want a pilot to mess with the current flow. Okay. So I'll reiterate exactly what I said before I start this. What do you get by supporting and doing this pilot? Not only do you make Phil happy, because that's what we're all here for, right? More importantly is that when it comes to supporting carriers, when you need those silver bullets, when you need capital and resources, they remember who helped them when they needed the help. So this is a help me, help you, help us kind of scenario. So if you have clients looking for term insurance, looking for IULs on the death benefit or protection side, and you want to compare or contrast compared to what you might have been selling, feel free to set up a time with me. We can go through it together and see is the gross worth the grief, and kind of go from there. But the most important thing is that, as we talked about in the beginning, as I emphasized a few times, rate integrity is a huge thing. S&P is the most tried and true for index strategies. Mutual of Omaha is literally the Swiss Army knife across the entire insurance industry, like med sups, dental plans, as well as the kit and caboodle for the life insurance side. So definitely worth a look. For those who build out orgs, they have structure for that too. So all things considered, it's a great, great carrier to partner with. I know we went 10 minutes over. I appreciate those who stayed on. Any quick questions? Anything that anyone wants to ask myself or Marianne?
This was great information. Thank you.
That just made my day. And Preethi's thumb up, that was like icing on the cake. So I want to say thank you guys. Appreciate the time. If we don't talk, have a great weekend, and look forward to talking to you guys next week. So have a great weekend, and thank you so much, Marianne. Really appreciate
Yes,
it.
yeah. Thanks for having us.
All right.
Alrighty. And if you, Phil, want to do any fully underwritten sometime, just let Connor and me know.
Absolutely. I
Okay.
appreciate you coming in on a
Okay.
pinch. All right.
All right. Thanks so
Have a
much.
great day, guys.
All right. Bye, everyone.
Bye.